maybe they did or didn't mention in the news articles and stuff that you can specify a max CPC range from $3 to $5.
Hold on. So the CPC range is defined by default, or can I choose the range?
No, it'll hit a saturation point basically.
Okay.
And you just decide where that is.
Okay, got it.
And between $3 and $5, which is...
But this is predefined. It has to be between 3 and 5.
Yes, a whopping $2 range. It's a...
Yes, because on average, for a multi-brand online retailer, a CPC between 3 and 5 is not sustainable.
No.
It's not even remotely to run ads profitably in a sustainable way.
This is exactly why I started digging into this, Chris, because the numbers are weird. Welcome to another episode of Growing Ecommerce. We've got an exciting agenda here for you today. We'll be talking about OpenAI Ads updates, a favorite theme of ours on this show, right, Chris?
Yes.
And another favorite theme, Google earnings. How much money Google is making.
Did they make money? Really? I think they were on the brink of having the first quarter where they have to report some losses.
I don't know about that. You tell me.
Yes.
As always, I'm one of your hosts, Mike, and with me is
Chris.
Hey, Chris.
Great to meet you. Let's jump right into favorite topic is a stretch, but we love to be realistic about OpenAI.
Exactly.
And again, we are open to share some roses with them because there was some movement.
Yeah. I mean, that's the one thing you can say, like, because we've talked that their ad platform is a bit primitive and stuff like that, but we're on this podcast every week together, and pretty much every week or every other week, you can talk about what OpenAI ads were up to.
Yes. So, credit where credit is due.
Yeah. And as I said before, that's what happens when you get a bunch of Google and Meta PMs and you give them nicotine products on tap and these Chinese peptides. Do you follow that at all?
I read something.
Yeah, the Chinese peptides and everything else. All right, but so we talked a couple of episodes ago how they were moving away from this Excel-based spreadsheet to a user interface, and now that's becoming much more widely available.
Yes,
so that's a huge milestone.
I think US only, as far as I know.
Yeah.
As of the time we're speaking here. Yeah. And we haven't seen it in detail, but what we have read is that it's a major advancement, of course.
Yeah.
But again, you're coming. I mean, if you start with spreadsheets, of course, the user interface will feel different.
Yeah.
That's for sure. So, but yes, there is movement and there is progress, right? We
definitely.
That's a statement we can make.
Yeah, absolutely.
What do we know about it?
Well, it's basically, it's the UI version of the Excel sheet. It has these functions that we've talked about in the past. Everything that you can do in there. You can select your bidding model in there because that's something that's changing. And we'll talk about that more in a second. You can do your ad groups and what there are as way of assets, which is still limited and primitive, but it's improving.
Okay.
So,
because why I'm asking what's in there. So we can the summary is that there's no fancy revolutionary shit in there. It's still quite a straightforward and limited set of functionalities.
Exactly.
But there's a user interface.
Exactly.
If this is a reason to celebrate, I don't know. Because, I mean, again, we are talking about a very, very much red ocean.
Yes.
I want to remind everyone, ChatGPT is competing with likes of Google, Meta, all the other paid social platforms. So, yes, and of course, they are far more advanced because they have started earlier. However, there's progress. There's one thing I would like to talk about in particular. The one limiting factor we discussed in detail a couple of episodes before was that there is only a CPM model in place. Exactly. They changed it.
Yeah, that's right. Kind of.
To a kind of. No. Don't spoil it. Don't spoil it.
Yeah, you're right, Chris. They changed it.
They changed it to a CPC model.
And they'll be rolling out CPA as well.
Yes. Hell of a thing. Because I genuinely prefer a CPC model for performance marketing compared to a CPM model.
Exactly.
But Mike, as always, there are nuances to it.
Yes.
Do you want to explore it a bit for us?
Sure. So I spoiled it a bit, but let's just spit it out. So the way their CPC model works, quote unquote, is that, and I don't want to be an OpenAI ads hater. It's just, I know that's now my brand, but
from the Timo guy to the OpenAI hater guy. Yeah. But to put this in perspective, there will be, I want to put this on Front Street again. We want OpenAI to succeed because it's good for the industry.
Yes.
But I think it's with all the hype happening around OpenAI, I think it's good that there are some people looking critically at it, exactly. And that's what we do.
Yes. So I'm proud of this one because this was largely glossed over in all the press coverage and stuff. It was like, oh yeah, there's a CPC model that's really great. Advertisers have been asking for this, and maybe they did or didn't mention in the news articles and stuff that you can specify a max CPC range from $3 to $5.
Hold on. So the CPC, the CPC range is defined by default, or can I choose the range?
You can there's so what this will do, it will buy you as many clicks as it can
between 3 and 5
within it's not allowed, it'll hit a saturation point basically.
Okay.
And you just decide where that is.
Okay, got it.
And between $3 and $5, okay. Which is,
but this is predefined. It has to be between 3 and 5.
Yes, a whopping $2 range. It's a
yes, because this is where I mean, I know that you have some some theories here why it's 3 to 5, but that's a hell of a thing.
Yeah,
I mean, I know industries where the CPCs on Google are maybe even way beyond $5.
Yeah.
But on average, for a multi-brand online retailer, a CPC between 3 and 5 is not sustainable.
No.
It's not even remotely to run ads profitably in a sustainable way.
This is exactly why I started digging into this, Chris, because the numbers are weird.
It's weird, and okay, good.
Yeah, like as you said, if you're, let's say, I don't think there are law or legal related ads running there right now for safety reasons and stuff, but so we could find another one. But any high order value industry,
fair enough,
but less legal, but whatever. There are people selling super expensive products.
Yes.
$5 might be way too low. To your point, you might set a max CPC at $20 or 20, whatever.
For sure, we have these type of flavors.
Sure, and then, but man, I actually did. That's so funny. I don't know if I can find this now. Shame on me. I forgot about that. But I looked at a very massive sample of max CPCs in Google Ads, and it was like $1 or something. It was way below
for sure.
Yes, and CPCs are more expensive in the U.S. in defense.
Fair enough.
But the thing here is, it's a super weird range. It's very constrained. It feels very artificial. So I had to start thinking, how did they arrive at that? Why?
Yes. And there's a theory.
Yeah.
And maybe to set the stage for you.
I love having this stage set. Will someone do my makeup too?
I did, man. The CPM model, we were talking about a couple of episodes before, was around $60, right?
That was the launch model. It's debated whether or not those are coming down over time. Right. Some people saying yes.
However, but the range of $60 CPM was basically the starting model.
Yeah.
This is the stage, man. Because I think
it's important knowledge.
It's important to know.
Yeah. So I just did a little algebra here, and I didn't like algebra when I was in high school, but it comes in handy once in a while because you can, if you can quickly kind of figure out some things. If you have this range, you can start to do some cross multiplication and stuff like that. And what I came up with was pretty interesting, because if you have a max CPC range of $3 to $5, and you do the algebra, you can do this one of two ways. You can calculate the CTR range that this corresponds to at a given CPM, or you can calculate the CPM range that this corresponds to at a given CTR. but it doesn't matter. It comes out to a similar thing. You'll realize that this will result in a range between 1.2 and 2% click-through rate at a $60 CPM.
This is a coincidence. It has to be.
Or if you would take a fixed CTR assumption of 1.5, a very reasonable CTR assumption, then it'll give you a CPM range between $45 and $75, which averages to $60.
Yes. So, may I state the obvious here?
Go for it.
And by the way, we certainly are not certain about this because we don't know.
Yeah.
But it seems like that there was how I see it. I think there was a massive backlash with regards to the $60 CPM. By default quarter, you have to start running ads on ChatGPT. I think there was a massive backlash with regards to where the heck are my CPCs? Because that's the adopted model, right, for most of the online platforms in the world. So they had to do something here.
Yeah.
But they derived the CPC model from the target CPM.
Yes, that's the way it looks to me.
And you called it a CPC model in disguise, right?
Yeah, or CPM.
A CPM model in disguise. That's the way to look at it.
The smoking gun will be when they roll out CPA. If the CPA constraints are the same.
Yes.
Then I'll feel pretty confident.
Yes. Because it has to. Else the CPM range wouldn't make sense.
Yeah.
So I know it doesn't feel right.
Yeah, I mean, and as an ad platform, that they talk about effective CPM. This is the way you monetize. Even Google, which is a CPC based platform, they're probably looking at they want to know. They're talking about monetizing views and monetizing. Yep. This is what they want to do, and I don't know how or why they arrived at an effective CPM of $60. My first thought was they just want to give it this premium feeling. It's what Netflix did.
Yes.
But maybe there's an economic rationale why they have to do it. But if you have these CPM advertisers that they've onboarded, and then you start bringing in CPC advertisers and the system's not built that robust yet, you can't let those CPC advertisers somehow undermine them, which they could do if they would set a massively higher bid. And they just need to protect the whole system at this point. So it again points to the fragility. And I think, you get the click measurement. That's great. That's in a direction of performance and in a direction of what performance marketers will expect as opposed to brand marketers. But it still feels weird.
It feels weird. Yes. And look, I mean, the context we're talking about here, for me, it all circles back to the, I don't know, I call it what it is, at this cockiness that they share this $100 billion ads revenue target within the next, I don't know, what is it, 4 years. Look, I mean, if you're that ambitious, if you're that cocky about the trajectory you want to show to the market with regards to your ads business, then of course the standards you hold accountable for is a different one. And this is what rubs me the wrong way. Because I think it's fair enough that you start incrementally and not everything runs smoothly. Fair enough. But this is where, this expectation gap opens up for me. Yes. Because a reminder to everyone, the ads business is a deeply red ocean. There are highly sophisticated players out there.
Yeah.
And I know the time we talk about this right now, Mike, in 2-3 weeks, there will be improvements made.
Of course, yeah.
But we're talking about a 4-year time span to hit the $100 billion.
Yes.
So this doesn't come across seamlessly, and I think it rubs me the wrong way.
Yes, I mean, if it's on the one hand, it's a moonshot vision, and you can admire the ambition or stuff like that, but where I come from, I always feel like they are just fleecing their investors and misleading their investors with statements like that. They're not a publicly traded company, so I don't know how that stuff's regulated, but it comes across the wrong way. I think the other thing that this weird model or these odd controls point to for me is that We're critical sometimes of ad rank in Google Ads. It's a bit of a black box, but ad rank and quality score, these things that are built in Google, they have a very important function as well, because they are refereeing the auction in a way that you can't, to a certain extent you can, but you can't purely just bid your way or spend your way to the top. There needs to be this relevance layer. And Google has the relevance game down pretty good. And I think OpenAI, they haven't solved that relevance part of the puzzle yet. And this is an additional safeguard to keep people from just gaming the system, since they don't have something in place.
But but compared to where Google is, and I reiterate my statement here. I really believe that the big winner will be Google. And in terms of will be, we talked about that I think Google has an unstoppable flywheel, but that the winner in terms of that people start to realize, hey, what we have here in Google is quite advanced shit. I think that's what's going to happen now. The more ChatGPT ads will be adopted, the more people will realize. And quite honestly speaking, you know that we are a big Microsoft partner, and Microsoft has done a lot of great things. But I've seen this in the past, because Microsoft has came a long way, and I think their ads environment improved significantly. But this is where Google is winning as well, not in terms of market share, but people say, wow, this is so much more seamless. The Google Ads account, my environment, compared to Microsoft. And Microsoft is heads and shoulders above ChatGPT. That's why I think Google is the winner here.
I mean, let's keep, I'm always happy to be wrong, but I think it's going to be a big ad platform as long as the company doesn't completely implode. It's going to be big. It's going to be relevant.
It will be bigger than Microsoft ads, I think.
Yeah, definitely.
And that would be a huge success.
And it will, it's going to be, it's just, again, it's this 100 billion yardstick that I don't approve. I don't appreciate. And what I really want at the end of this is that advertisers have self-respect. They're not getting in the FOMO thing. Like, yes, this is something you need to watch. There could be some early mover advantages here, but you should demand something from OpenAI for this. You should expect something. And you should expect more than a $60 CPM model disguised as a CPC model. Like, that's not there yet.
For sure.
It's going to get better, but I really want people to have self-respect when it comes to this. OpenAI should be, courting them for their budget and not the other way around. So anyway,
for sure.
But
course on that.
You mentioned Google winning.
Maybe the perfect segue, huh?
Yeah.
Google earnings. I mean, we it's kind of off topic in terms of that we haven't been covering earnings calls for quite some time yet.
Because we're a little late to the party as well.
For sure. But I think we wanted to, and there are other podcasts which go way more into detail here. But of course, Google earnings calls are relevant for us because they reflect the commercial viability of the business of Google. And Google is just, the most dominant player in the ads environment. That's why we decided to have a look at this and just derive our interpretations, what these earnings mean. Maybe I just start very high level.
Sure.
And most of the people probably have heard about it. The ones who haven't, no, Google, there were no losses for Google in Q1. Quite the contrary. The revenue was up year over year by 22%. So they crossed roughly $110 billion.
Insane.
That's insane. But the most insane thing, Mike, is that the profit, the earnings per share were up 80% year over year. They have beaten the street estimates by roughly 90%. And I think that the profit was around $60 billion for Q1. And this is...
Did you say by 90%?
Roughly 90%. I mean, the street estimates, you can always look at it from one way or another. But they really knocked it out of the park. And I think, look, these are the high level numbers. But for me, the most important two very important takeaways, I think, which we should discuss a bit here. Their core product search, it's roaring.
Yes. Yeah.
And I know I have been wrong 1.5 years ago. Maybe we talked about that there's this real competition out there now. AI will disrupt this revenue stream for Google. We have been wrong. I have been wrong. AI is not going to kill search because Google plays it perfectly. And just to tell you some numbers, search and other was basically the revenue section for their core product. It grew 19% year over year. YouTube grew 11% year over year. So their core product soars and is it's just a fucking cash cow. Yeah. And the other thing is they have this second, or if you will, the third major revenue pillar is Google Cloud. GCS is also knocking it out of the park. It's mind blowing. I think they grossed 20 billion. But for me, the more important thing is they grew significantly more than the two other big players, which is Azure and AWS.
Yeah.
Almost twice as fast the growth is for Google compared to these two major competitors. These are the two major takeaways. We talked about this. Google has the perfect flywheel, and they do a lot of things right.
Yeah.
That's the high level takeaway from my side. You can't have a better quarter than this one.
I mean,
until Q2 comes out.
Until next quarter, yeah. Which we're already well in the middle of it. Yeah. I mean, I can only echo that. And it's just something that, so I love to pull up the transcripts of learning calls.
They are very telling.
Yes. And because when you listen, that's one thing, but when you have those words on the page in front of you, at least for me, someone like me, it's a whole other resource, because you can really I love skimming through there. I'll do my Command F and jump around the page looking for keywords. Like I can just type in AI Max and find out how many times they mention it, where they mention it, whatever I want to find out what they're talking about now.
What did you find out?
Well, what I found was that I should repeat this exercise for just I don't know, 2 years ago or looking back a bit, but they talked so little about advertising at all compared to some of the other stuff. And e-commerce was quite present, but it was in the form of UCP, which was mentioned more than ads. UCP was, and agentic purchasing. So they're very focused on this, and it won't be a surprise to you. I just downloaded their transcript as a PDF and had AI make a word cloud out of it. Word clouds are one of those things I always feel like they're so cheesy, but
sometimes they
can be really informative too. But I mean, no surprise, AI was the single most frequent thing that they said in the call.
Gemini second?
Gemini, and then
it's the cloud business.
Search and cloud. Where actually cloud was mentioned slightly more than search, but comparable amounts. But they're just hammering home these themes. And even something like, I think probably still a lot of people don't know what a TPU is, but TPUs was mentioned way more than the word ads. They talked about TPUs.
No surprise there.
Yeah, well, in the context, yeah, it's very important right now. So I think it's a super fascinating moment in time. It shows you how much, and next quarter the focus could, I think they pick their themes and stuff like that, but it's just crazy that the business is evolving that direction.
Yeah.
And again, they are the other a couple of words that they use a lot. They're always either saying something's new or something's continuing. Those are the things that they hit. New, continuing, new, continuing. Because they need to show that they're innovating and that things are stable.
Yes.
But in general, you just see that this agentic commerce and everything about this is a huge bet for them. And one thing that ties it all together to me that Sundar said, he was talking about UCP and all the partners that they got on recently. We talked about that a couple weeks back. And he said that for him, UCP is all about cloud.
Yeah.
And then he said, and TPUs for him, he said this phrase basically twice. He said TPUs for him are all about cloud.
Yes.
And so you can see the direction that this is going.
Yes. And just talking about cloud, just to provide some numbers, Q1 revenue, these three dominant players, AWS, Amazon, Azure, Microsoft, and Google GCS, Google Cloud. Market share wise, AWS still leading with roughly 37 billion in Q1, 28% year-over-year growth. 34 billion revenue is Azure, second in terms of revenue share, 39% year-over-year growth, significant.
Yeah.
Google at 20 billion, but with a whooping 63% year-over-year growth. And this circles back to one of the LinkedIn statements or posts I had half a year ago, where I said, wherever you look at Google, there is a flywheel in place, because the cloud business is soaring from my perspective, because it's driven by Gemini and all the related products they have here. And Gemini is soaring because it's seamlessly embedded into the ads ecosystem, into the Google Workspace. They do so many things right. It's really fascinating to look at.
Yes.
And again, we are for sure no Google fanboys. Quite the contrary. We were accused of being way too critical with Google. But this, where they are at right now, holy shit.
Yes.
Holy shit. As we speak, this week we had Google in our Vienna office, and they showed us certain things about Gemini Enterprise. Mate, I don't want to share details with you, but everything they do drives client value. Hard to beat.
I just think they're
hard to beat.
Yeah, I think they're perfectly poised here, and we've traded opinions back and forth in the past if there's a bubble in this environment overall, and I still think that there is, but
I know my take on it.
Yeah, but I also think that Google will be this will actually be beneficial to a certain extent in the long term. This will be beneficial to Google because I think it will concentrate the market around them even further and around some others. But especially with this whole TPU topic, and they have their own proprietary, independent vertical supply there. Yeah. And it doesn't matter what happens to these contracts with OpenAI and NVIDIA or whatever.
Yes. Vertical integration, is something it's hardly talked about, but they are in quite a unique position.
Yes.
And by the way, the bubble thing is of course tied to the new arms race with regards to CapEx, right? Every company is burning billions of dollars. The CapEx guidance, capital expenses guidance of Google for the year 2026, a very moderate $180 billion. But the cool thing is, you know what? They earn so much money that there's no risk to it.
Yeah.
There's no risk to it. Yeah. They can afford to invest. And I think they have the strategy laying in front of them. They know what to build, how to build it. Again, no financial advice. I've bought some shares a couple of months ago, but no financial advice. I think this company is set up the right way. And to relate back to the core business, to the core topic of our podcast, the e-commerce flywheel is there. Yes. They embed their AI power into the ads ecosystem like no one else. Yeah. And this is good for our clients, I think. It's a challenge for all agencies in the world, for sure. Yeah. But Google does a lot of things right.
Yeah, that's correct. Well, let's leave it on that note.
Let's see what Q2 brings.
Exactly.
But thanks, Mike. It was a pleasure.
And thank you all for listening. This has been another episode of Growing Ecommerce, brought to you as always by Smarter Ecommerce, also known as SMEC. You can learn more at smarter-ecommerce.com. And as always, please leave us a review, give us a shout out on social media. We're always happy to hear from you. Thanks. We'll see you next time.
Bye-bye. Thanks, sis.
you.